Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Midweek Brief. Today, we're going to talk a little bit about some of the news that have come across the wires in the last 18 hours or so. We had big elections that came across yesterday. Also, the government shutdown rolls on. We had a bunch of news events out. I got a question over here in YouTube land. Eyes Hesse says, hey, hello, what happened to the markets today? An hour after the market opened, the candles went crazy. We had a bunch of peripheral news events that brought a little bit of the participation to the markets. We had some ISM numbers, I believe. We're going to go ahead and look at those in a second. A lot of times those are released during the U.S. session. Also today, you're about an hour, 2 hours after, about an hour after the U.S. Open, you had the EIA crude oil inventory report. Came in absolutely huge. There was a big supply build today, one of the biggest that we've seen since, I think it is the biggest week-over-week build we've seen, and that's one of the reasons why U.S. oil is selling off right now. It's sort of what we were waiting for out of fall seasonality. I think that definitely a bearish mindset is warranted if you're going to trade crude oil. I think the worst of that rally that forced out all the short squeeze, I think could be over. So a great question, Eyes. There was a few news events that we're going to cover here in a second. Tuku, good to see you, Tuku. Had some technical issues today, some connection issues. So if we do go down, we will be back tomorrow with our Switch Markets Live webinar series on the 5-8-13 scalping strategy. I want to go ahead and cover that right now because if the internet does go down, and it's been up and down, I've never really seen it go down. The Ethernet goes down, the landline goes down, and then also the phone and the mobile data, all that went down at the same time. Typically, that means a major hacking attack. I don't know that it's designed to hit me personally, but I know that anytime your landline goes down and your data on your phone goes down, it means you've got a real serious issue with your internet. So if we do go off in the middle of the stream, you're just going to have to, we'll be back at it tomorrow. I don't know that it'll come back on, but right now we're looking pretty good. So good to see everybody back. Ahmed, good to see you. Nice to see you too. We've got a lot to go over today. So remember, if you want to trade any of these ideas and or markets, be sure to check out the Switch Markets community over at switchmarkets.com. We have a lot of free tools there. There's just a lot of value-added things. And then also Switch Markets on YouTube. If you're not already there, get there. That's pretty much where all of our new content is going right now. And we should be up and running with our YouTube series. And that's going to really cover a lot of the service suite over at Switch Markets, and then also some basic educational stuff when it comes to the markets in general. All right, we got a trade update. Government government shutdown rolls on. Dollar CAD in play. This is one that we put out there yesterday, and it's starting to come right to our entry. I really like this trade a lot. You'll notice that on the monthly chart, our time frame, is large. I'm not going to lie to you. A monthly chart's a big time frame, but these levels, when these macro levels are nailed down, you've got to be interested. You've got to know exactly where they're at. So right here, we're sort of closing in on the 50% level. Big month already, up almost 1%. Really a big month for the dollar CAD. We've broken out above 38%, which is right around 140, and now we're grinding higher up to 140, 165. So our port of call right there is going to be right over 143. I believe our entry is 142.94. So we're only about 160 pips away. Could easily get that. Now remember, the U.S. government shutdown is rolling on. We're not expecting to get our NFP numbers this week, but we may. So if we do get them, I'll be sure to let you know on Friday. As far as gold goes, really some interesting stuff here on gold. We've got nice compression right around that 38% level. Pretty much all week long, we've tested the waters beneath 39.71, and now we've rallied up above there, 39.81, somewhere in there. I think we're in an interesting situation where you probably want to be, I won't say hold longs because this trade location isn't great, but definitely start respecting 39.71. From a weekly perspective, typically what we see price action-wise is you're going to see a situation where we're going to sell off potentially and then maybe wash out last week's low. If that does happen, then we're going much, much lower. We have a trade idea that's a buy down there from right around that 38.15 level. We're going to talk more about that as the week goes on. But right this minute, there should be two levels in your mind if you're trading gold, at least in my opinion. 39.71 is absolutely huge. That's a 38% level. And then also last week's low. Last week's low is down there at 38.86. This is a key zone. It's fairly big. It's about 100 or so pip or 100 or so dollars. So you're going to be watching this area very closely. I don't necessarily know that this 38% is ready to give way. It doesn't feel like it. But if we do get an opportunity potentially to sell down here, you can see that spike low. That pretty much is going to show you that the breakout's on. Right now, though, there are reasons to be optimistic here with a buy. Let's go down to a 4-hour chart, and you'll see exactly what we have here. We sort of had that bottom that sort of set up there early in the week, the 4th of November, which was yesterday, and now we're grinding higher, and we're sort of moving higher from this level. So if I was trading gold, spot gold right now, I would definitely be looking at something like this. This zone right around 39.71, 39.67 on a short time frame, on intraday time frames, definitely have to respect it. Something big is going to have to happen to shake price beneath that zone if it is to happen at all. So good to see everybody back. Tina, good to see you. Tina, welcome. Andrea Gorwal, good to see you, Andrea. I think that there's some interesting markets in play today. Feel free to go ahead and ask any question that you like. I think that gold is always going to be good. For the rest of the year, gold's going to be pretty good. Even if it goes into rotation, we've still got some key levels to play off of, so we should be getting multiple trades a week on gold, and that's something that we really like to have. I mean, a lot of action in the metals markets, the gold market, that really does mean that you're going to have an opportunity to make that money that you're looking for. You need trades. You need quality setups. This isn't a bad setup at all right here. If you do get that pullback, right down to that zone, maybe 71, maybe a little deeper, maybe 69, 70, somewhere in there. Let's go down a 30-minute chart. Have a look at the U.S. session. It's been an interesting day. Right there's sort of right there's your opening bell, ding, ding. Typically, you see volume come back into the market about 8 a.m. Eastern, so about an hour and a half ahead of that New York Open. Typically, you do see the volume spike, and that gives us a pretty good opportunity to bid, at least on an up day. So right here, we could run right from that spike low, and we're just basically looking for Fibonacci's to line up. I would be just waiting down here. You've got this sort of convergence here at 39.69, 78%, and then our 4 hours down there at 39.66 and then 39.71. You probably could get, if you get an opportunity to trade that, it's about $10 south of where we're currently trading. Probably going to pan out to be pretty good. And that's going to be one of those trades that if you're an intraday trader, do you get it today? It's tough, but if you do get it, you've got a great chance to make a little bit of money there. And that's really all you can ask in the gold market when these trades come your way. You probably need to execute. And we try to execute every trade at a high level. Very, very important. T. Marina, good to see you, T. Welcome. As far as the rest of this market today goes, Bitcoin, we talked a lot about Bitcoin yesterday. This one was definitely on our radar. And you can see what happened right here. You got a 30-minute chart that comes into play. We saw the big sell-off yesterday during the live stream that we were getting a lot of questions on. The $100,000 level is big. It was a big psychological zone. We didn't think we were going much below it, but we did wash out a lot of retail traders that were sort of holding longs got wiped out at 100. That's just sort of the way that it is. And it's funny because, I mean, it's not funny if you're holding those positions, but take a look at this. I mean, when the volume spikes, the volume spiked right here. Okay, so it's sort of bullish volume, but notice what happens to price on the 30-minute chart. Not much. It's a doji, so the bidders were there to protect it, and then you started to see the areas just start to get taken out, and then you'll notice right there, I'm sure there's a lot of stops right down there beneath 98, but think about what we could do with that type of level. We had a retracement zone, long-term retracement zone. We're going to go ahead and ignore that for right now, but we did have 100,000. The 100,000 key level was big, and when we bounced, we checked the waters underneath 100, and then we bounced back, what happened? 920 EMA crossover. This was one that I was watching yesterday. I said, if we were looking to get long, a 920 EMA might be pretty good. Now, on a 30-minute chart, is it that great? No, it's not. It's more of an intraday, maybe an overnight trade in Bitcoin. This one worked like a charm. We rejected this key area of 100. We finally got our bid signal right around 9:30 p.m. my time, 11:30 p.m. Eastern. And then we just have sort of crept higher from here. This would be a textbook example of an accumulation trade. This would be one where you got pretty good trade location and the bidders are just sort of hitting the market. Notice the volumes are very low, so there isn't really any danger of getting a big sweep south unless we see some kind of news event. So when you take a good look at what's happening here, there's your signal. You bounced right off of that key level, and there's your long. Now, let's say we want to take a position, which isn't a bad way to be approaching this Bitcoin market right now. You say, okay, I want to take a position. 4-hour chart, pretty good place to begin. Do you have an opportunity to do it right now? No, you don't. You've got to wait for that 9 EMA to cross over the 20 EMA, and then you'll have a chance maybe to play this bid. You would love to see this come into play like at 105, maybe a 106 bid. Be beautiful up above our 38%, right on 106.8, and that potentially could be your swing trade up looking for 120 or 125. Now, reading a lot of stories today on, Bitcoin whales. There's evidence Bitcoin whales are dumping Bitcoin. And I go, I don't know about that. I don't know that any of those stories have ever been true. But the scuttlebutt is, they're getting out of Bitcoin. And I go, yeah, I don't know. I mean, it looks to me like they tested 100,000 and we bounced off of it. Now, if we do compress, consolidate, and then maybe we get a breakout beneath 100, and then we're right down there where we want to be, 94, 95,000. I think that's a very high probability trade, at least for 5 or 10% on a payback on you, relatively short order. So we're watching that closely. I think that's a great level to attack. I mean, everybody right now has an opinion on Bitcoin at 100,000. There's no question about it. What's mine? I am bullish. The long-term trend is there. The market dynamics are there. Eventually, we will see a weaker U.S. dollar. We're just probably looking at 2026 now. What would be a great trade location? Well, if you're playing on the cash market, you could probably buy 100,000s and get away with it. Just be ready to hold. Be ready to buy it and hold for a while. But we know that if we get a deep retracement down here at 94, 94.5, something like that, maybe even right down here at 85, 85.70, something like that, 78% of the current monthly wave, that would be a pretty good entry as well. We got a message in the live chat last night that was in the How to Trade trading room. That was one of our traders was in there. He says, Shane, I like 82 is potentially being the bottom of this. Nice trend line setting up for 82 in Bitcoin. And I go, well, I mean, it certainly could be. I mean, there are no rules. Once 100 gives away, there are no rules of how low this thing can go. We could see a crater job down to 75,000. We could see one to 68. Well, you really could see it and then just see the rocket ship right back up. Now, here's the thing. 100 is a big deal. Once 100 gives way, that's not going to just be, okay, well, it's a potential target, topside target, and it will be, but it'll start acting as resistance once you see the price get established under there. So it is a saturated zone, in my opinion. Still, though, the bidders were there. The bidders defended it, and I think if we get a 4-hour crossover right here on the 920, that could be a pretty darn good trade for maybe later this week. As far as your daily, are you really going to get a daily crossover right here? Probably not for a while, but maybe, if you do get this to flatten out a bit and then cross the 9 to cross over the 20 up above that long-term 38% level, then you'll have a pretty darn good chance of making a little bit of money. So I wish it was a little bit taller. No, I'm just kidding. I wish I had a bigger trading account. I wish we're world peace, all that stuff. We don't wish, we don't hope. But I tell you what, this is one of those things where Yeah, probably should have been a 50% trader here, buying it just because of the proximity to 100,000. But I'm not interested in that. I think the getting's really going to get good down here, down at 62% or right around maybe. I wouldn't play the 20 EMA. That has very little significance to me just by itself. But 78%, 85.5, maybe 87.5, somewhere right in this area could be pretty good. So let's just be patient with it. I mean, there's no reason to rush right in unless you get that 920 crossover, and then you could probably go in guns blazing and see if you can make a few bucks. I still want to make mistakes to the long. I mean, if I'm going to make mistakes in Bitcoin, I'm going to make them to the long. All right, Japanese 225. This is the Nikkei. We had this question yesterday. Prima facie evidence of how Fibonacci's can function. A successful Fibonacci trade, this was it. Weekly chart, we had a nice spike low to the spike highs right there. These all-time highs up around 52. Really sold off down to 49.4. I mean, almost hit it perfect. There's your low, 49, about 49 even. 50,000 was the key level, really the big round number here. And, I mean, we have just absolutely exploded today. Let's go down to our daily chart. That's beautiful. I mean, that is exactly what you're looking for. That is exactly what you're looking for out of a pullback to a Fibonacci retracement. There's absolutely no two ways about it. When you sit there and you say, okay, Shane, what would you say is a great trade for an index? Then I'd say, well, there's a little bit of a void there. Did we trade it right there? Yeah, so I wouldn't really call it a gap, but still, we went right down and tested it, went to 38% and bounced up. Extremely bullish move there for the Nikkei 225. I wouldn't be surprised to see the Nikkei trend a lot higher, especially when we know the Japanese yen is going to start losing some market share. We have a pretty good idea that the BOJ is going to want to cut interest rates. You have a new prime minister in Japan, a lot of pressure to sort of go the way that the U.S. is going to go and cut those rates down. Believe me, you don't have to twist the BOJ's arm to cut interest rates into negative territory, negative deposit rates. That's pretty much what they like to do there. Interesting stuff. I think that I think it was a great trade. The Nikkei 225 was one of those that in the first year of my live streaming, which was 3 years ago now, the first year I was on the Nikkei all the time because I really focused my attention to the Asia Pacific session. And I saw so many great trades on the Nikkei that I have a soft spot for the Nikkei 225. So this right here, I mean, if you're a Fibonacci trader, and at least if you do things the way that I do them, which nobody does really out there, you'll be watching YouTube a long time to find somebody work Fibonacci's the way that I do. But this right here, I mean, this is just beautiful. Right there, you got a key level of 50. You sort of had a little bit of a void. I won't call it a gap, but there's a little bit of a void there. Pull back to 49.4, and then you're right back up to 51, 231. I mean, that's just a massive gain, and one of those that is doable. You could actually have picked that off and got that bottom. You could have got it. So if you're one of these traders that loves the international indices, and there's a lot of you out there that are in this region that are trading international indices, I will be the first one to say I'm not an expert in the CAC 40 or the German 30, the DAX. I'm not. You'd be better served watching somebody in the Eurozone break those down for you. But I know a little bit about the Nikkei, and I know a little bit about Japan. And I'll tell you what, that Nikkei trade right there, that's one of those that you just go, geez, if I could get 3 or 4 of those a year just on one asset, man, you're in business. Pretty good trade, pretty fast trade. Let's see, Nico, good to see you. Nico, all caps. Hi, Shane. All right, I like the all caps. Aggressive midweek trade. I love it. Now's the time to be aggressive. We got pretty good action out there. We're actually going to look at some U.S. indices here in a second, but they just keep seeming to trend higher and higher and higher. That's for sure. Let me see Davison Sopo. Hi, Shane. Glad to be back in the stream and in the markets. Absolutely. Glad to have you here, Davison. John Gacho, Gage. Man, I am terrible with names, but I know how to say John. John, hello, guys. How are you? I'm confident you're doing well. Absolutely. Let me see, Ahmed. You did well on the France 40. I could get us set up for the bounce on it. Well, right on. The CAC 40, the France 40, whatever you want to call it. I've always had issues understanding the ins and outs of like the DAX and the CAC 40 with respect to their correlation to the FTSE. I don't really get it. There isn't much of one. Ideally, indices are all supposed to go up. Like in the United States, you're going to have the Dow, the S&P, and the NASDAQ. They typically all run in tandem. Not so fast in the Eurozone. especially when you have when you have the big UK, the big FTSE out of the UK, and then you've got the German 30 and the CAC 40. Those are all, France and Germany. Germany would be the EU's largest economy, but still France has a tremendous amount of action in it. You'd think that all those would sort of move in the same direction according to monetary policy of the region, but that's where the Bank of England comes in. That's where the ECB comes in. Very dynamic, complex atmosphere. It really is. That's for sure. Just the way it is. Amazon.com. Let's take a look at this stock. Fantastic stuff. We saw this gap fill in beautifully yesterday, and then we got a bit more of a sell-off here. The sell-off went right down to about 245. I'm still holding out for the dip. I'm pretty sure we get it. I would be very surprised. Very surprised if you don't get this dip down to the gap right around 240, 241, 240, 250. That's going to be a pretty good trade, and I think that's coming our way here relatively soon. Today, probably not today, Amazon, but you look at these daily ranges. I mean, they just are massive. The earnings reports come out, all sorts of different things, and you're just driving these prices directionally on intraday basis almost every single session. Let me see. John, gaucho means small calf in Bantu. Oh, right on. Small cow, small calf. Yep. We say calf here in the United States, and, we can break them up into all sorts of different divisions. And we got feeder cattle. We've got, what was the other one? It was feeder cattle and, live cattle and feeder cattle. Those are basically steers of different weights. So yeah, every weight class has a different name for the cows. I just call them cattle, but that's for sure. Let me see. Tina Shing, US 100 is very bullish. Yeah, let's go ahead and have a look. The US 100 is one of these that we really, we've got a lot of different ideas on different ways to trade the US 100. There's no question about it. We went right down to this long-term level. This is a daily chart, 62%. We pulled right back there to 25,258. But take a look at this low today, 25,155. Essentially, they stepped in and they defended 25,000. And now, you're just up and rolling. An absolutely big day to take up another percent. If I could speak a little clearer, that would be great. But like I said, we had some tech issues today, sort of threw me off my prep. But 27.5 up here. So 27.5 is where we want to scalp to the short. I think we get there relatively quickly. I really do. I don't know, the news events that we're going to talk about today, are they really bullish market drivers? No, they're not. But there is no denying the AI bubble. There's no denying the AI bubble right now. And, when we start talking about what a bubble looks like, and if you guys have ever seen a bubble, a lot of you are too young. You've never really seen a bubble. Some of you are veterans and have been in the market and seen more bubbles than I have. I've witnessed a few in my life. The tech bubble back in 2000, I was very young, just in college. That one, when the tech bubble burst, I remember being in Silicon Valley. I actually spent some time down there in California, and they called them the dot-commers, and basically they all were hitting the unemployment line, and they went from making just absolute stacks of cash to being broke, and it happened overnight. It happened very, very fast. So that was the first bubble that I saw. The second bubble I saw was the housing bubble, and I was part of that. The first one right around 2000, and I would say 2006 to 8. And here's the thing about bubbles. Right now we're in the midst of an AI bubble, and that's translating into huge gains for your stock market, specifically the NASDAQ. The thing about bubbles is that when you're in them, you don't ever believe they're going to end. And everybody knows they're going to end. At some point, they're going to end. You will see a big pullback, and the bubble will pop. No question about it. That's been happening all the way back to the 13th century with the tulip mania in Denmark. I believe it was Denmark. The idea here is that, we know that things can't go up forever. Right now, AI has brought a completely different dynamic to our stock market valuations. If you're involved with big data and AI and tech and you're a chip maker, everything is rosy right now. You don't believe that it can ever end. It can end, and when it ends, it'll end quickly. Typically what happens when a bubble bursts is it's just consolidation. You see the big guys get in and consolidate, and they really get in and buy all the hard assets facing a sector. So I don't think AI is going to be any different. I could see when the bubble does pop, there's going to be a few AI winners that come out of it, and all the resources are just going to consolidate. You're almost seeing that happen right now with what was it? Amazon's deal with OpenAI, $38 billion. That's huge. Palantir, their deal with the United States government to provide big data solutions. These things are all sort of, it's not Horizontal integration is typically healthy. That's when you have a bunch of different businesses working in a sector. Everybody's competing, and some get a competitive advantage and they grow. And then you have the vertical integration. So the sort of the pretenders off of the edge get eliminated, and then the big businesses go straight up. When they start merging, like you're seeing in the AI space right now, it's very difficult because we haven't really been in this atmosphere very long. Nobody really knows what an AI, I guess, monster or a megalith would look like. We have some guesses. We think NVIDIA is always going to be there making chips. We think that OpenAI is going to be a player. We think Palantir is going to be big data solutions for the next 100 years. But what happens when, Amazon, buys or merges with OpenAI, and OpenAI merges with Palantir, and you have everybody just sort of getting on the same boat? That's called vertical integration. That's when all these businesses come together, and then there's only a few people in the space. A prime example of vertical integration has been BlackRock, especially in the fund industry. So vertical integration is not really good for us, the consumer. It's not, because what happens is there's just fewer and fewer companies that are in the space. And I believe that you typically see the bubble burst before you get the true vertical integration. We saw it in oil. COVID, the oil bubble wasn't even a bubble, but the oil market crashed. What happened? You only have a few players left in that space now, at least here in the United States. So there's a lot going on here with AI. But as far as the US 100 goes, absolutely, Tina, it's 100% bullish. For me, you want to be long or short right now? You probably want to be long. Realistically, I don't really have any great entries right here. You're back above that 38% level. You do have a bit of a value area up here, right around 26,000, but you probably would be looking to hold longs until 27.5, which could happen sooner rather than later. We got about another month of premium trading left in this year, and then we reset the clock in January. So a lot going on. Bullish, 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 yeah. You almost have to be. You almost have to be until some major challenge derails AI. And I don't know what that could be. I mean, my internet all went off today. So if that ever happens to these AI data centers, that's a wrap. That's for sure. Let me see, Nico. Could you look at the CAD Swissy? Absolutely. Let me see. Y2K, absolutely. Y2K was a big deal, Eyes. They had the world convinced that the world's computers were all going to crash. And it was going to be the end of the world, essentially, the end of the tech world. And it wasn't. They just lost financing, and that was basically a wrap. And then you saw the consolidation. Monsters of the industry, folks like Sun Microsystems, folks like Cisco, that were the biggest players around, all of a sudden got gobbled up, and they lost a lot of their market share to the next generation of tech players, which is pretty much who we see out there today. But AI is wildly unpredictable. Don't know what it's going to do. Don't know the impact it's going to have. Spike low there. Spike high there. Beautiful trade. It's a beautiful trade, Nico. I can't draw that up really any better. So if you were on a daily chart, spike low, spike high, downside support right at about 57.25. What did we print today? 57.25, 57.24. That's a beautiful thing right there. That sets you up for just a fantastic rally and a beautiful scalp. What else could we do with this? I have no problem at all going to my 920 crossover strategy and plugging in a lot of these assets because we know exactly how we should be trading them. We really do. Okay, so on a monthly chart on a 920, I don't expect anybody to really be trading a monthly, but it is possible. There's your monthly sell, and that was years ago. So that would be an example of what the big money players would do. They would have went short, and they would just be holding shorts here. There's no problem with that. What do we do now? Okay, we got a monthly sort of scenario here where we've got sort of a hammer. That's a hammer formation. That suggests that maybe we're going to get a reversal. Let's take this right down to a pretty good time frame to be doing this 920 on a Forex pair. A daily chart is pretty good. A lot of folks don't like trading the daily charts on these crossovers because they say the ranges are too big. Well, I mean, where would my stop loss realistically be? I got a couple options. You probably put it down beneath this swing low. The best place, if you're going to take a position on this for a given period of time, is going to be down here beneath this swing low. So if you're going to buy, essentially you're going to buy in at 57.43, and your stop loss is somewhere down there at 55.94. Is that really that big? Not really. Was it 150 pips, something like that? That's not the end of the world. You can dial down. I mean, you could dial down your leverage to reflect a reasonable risk there. It's not bad at all. So if you're looking at something like this, yeah, that's not a bad trade to be holding longs. I mean, it really is what it is. If you wanted to tighten this thing up, you could put your stop loss right here. I'd probably put it beneath 56.50 though, if I was going to be super aggressive. So somewhere in that area, 56.47, and then you're right here, 57.42, 56.47, 57.42. What are you looking at, 70 pips, something like that? It's not that bad, or 100 pips, somewhere in that neighborhood. It just isn't that big of a deal. Just account for it with your leverage. All right, let's go ahead and take this right down to a pretty good time frame as well, a 4-hour chart. Now you're starting to see this develop. Now you did have a bid back here, all right, the 28th of October, and you got the massive move. So what would you be doing right now? Well, I mean, unfortunately, it's almost looking like it's going to set up potentially as a sell. But I don't think that you'd want to sell and play against that daily trend. So 4-hour charts are pretty good on these. And remember, they're not all going to win. You see right there was a sell signal, but you got knocked out and then you bought it. Then you bought it and you had a chance. So if you wanted to trade like that, you could definitely look at taking maybe a sell here if it is to develop. And if things go higher and we get that crossover, then you just jump back into the market. The beauty of this type of trading, especially crossover trading, is when you get in there, look at your loss. Just to sort of show you why you're going to have to get at least a 1-to-1 or maybe a 1-to-2. A lot of folks on these crossover trades, they're shooting for 1-to-3s, 1-to-4s. And this is the reason why, because you can get a nice big move and it'll really wipe out the losses that you take. I don't mind that on crossover trading. I really don't. You just have to be sure that you have the capital to do it. I like to win a lot. I like that cash register to always be ringing. You know, if I'm ringing the cash register every day, I'm a pretty happy man. If I'm not real happy with it. Going weeks and weeks without a winning trade is tough to do, but it's what a lot of the greats do. But remember, a lot of the greats are wealthy going in. So if this was your sell signal right here, your sell would be right around there, right around 56.70, something like that. And then you get stopped out right up here. Your high is about 57.04. It just isn't that much money, 34 pips. And then you turn around and you're looking at a bid here at 56.90, which actually, if you reversed your position right here, got you out significantly tighter. It's hardly a risk at all. It really is. So, I mean, probably going to make a few more videos on how to trade the 920 in a more aggressive fashion than I put out there at the first iteration of the videos. I think that this type of strategy is really useful, and it's a great place to begin, especially if you're a new trader looking for a strategy. If you're somebody who just says, okay, I want to just look at this market, look at a market, you could use the 920. It can be pretty good. All right, we got a few things to go over here fundamental-wise. Let's see here. A couple of questions first. Nico Letterman, when you say the gaps get filled, when can we expect them to? Yeah, that's the trick. That's the trick, Nico. That is the trick. I mean, when gaps get filled, it could be anywhere from a couple of hours to a couple of days to a big gap like we saw in the natural gas market, where it took, would it take 2 years to fill it? Because we had a gap down to open 2023. So, yeah, it was about 18 months to fill it. There are no rules on when it has to get filled. That's why it's sort of you're like, it's sort of a cop-out. And I said, not really. I mean, we just build trades accordingly. So, like, let's say you were gonna attack Amazon's gap right here. You'd say, okay, what do I have to do? Number one, let's say if you're short in a CFD product, okay, so you already went short up here and you did well. You already filled in this gap. You could still be holding a short. But let's say you were short. You were legitimately wanted to take a shot at this gap down here. Now, what would you do? Same thing we always do. Stop loss would be somewhere up above that swing high, and you'd be looking to get that move down into this gap area. So if we sold right here at 250, let's say we sold 250s, and I'm looking for 240s, and my stop loss is going to be at 260s. That's the trade. That's what the trade would look like. And as soon as you get taken out, you're done. But as far as putting time constraints on it, you're going to run into real issues, especially if you're trying to short things. Now, if you're going long, that's easy. It doesn't matter how long it takes. You go, okay, there's a gap down here at 240. I know that's likely to set up. It's going to get filled in, and it could be. Typically, these act as pretty good support areas, right? You're going to get the fill in, and then we're going to continue the trend, right? Unless we get another big news item or something that messes the markets up, which is very possible. But if you do get the market to come down there and give you a smell, then you could get in. And if you're talking about buying stocks without leverage, that's just about waiting for whenever it happens. Can be a pretty good way to trade stocks. I was sort of raised doing that in the commodities markets because we always believed that those voids, those skipped price points, they weren't going to be on the table very long, and we either wanted to play moves back down to those gaps, or we would be looking to buy those gaps or buying the market to go back up and fill a gap. So to answer your question, there's no set rule for me on how long it's going to take, but I am very aware of where gaps are. And that goes back to Stoudemire's market profile stuff from the 1980s that was built on the Chicago Mercantile Exchange for commodities. That's what I was introduced to. That's what I was raised. And if you know anything about market profile or TPO charts or things like that, the idea is that price establishes an area of fair value, and then it moves either up or down, and then it establishes a period of fair value, and then you have another directional move, and then it does this again. And that typically is how markets work. They go sideways and then they move, and then they go sideways and then they move. And more so nowadays, you get more waves, that's for sure, because there just is more participation. But in the old days, like the pit days, you'd have a daily range, boom, and then you'd move, rotate, and then boom, you'd move and rotate. And that's where that gap concept really comes into play. It's fascinating stuff. That's how I was brought into the market. It's difficult though, and I thought about doing some webinars on it. I thought about it, maybe building some videos, but it can get very, very advanced. I mean, I remember the guide I had to read. That was my job before I could start trading. I had to do a few things, and reading Stoudemire's work was one of them, and the thing was like 500 pages. And I went, Jesus, this is taking me forever. But it is more advanced. So if the gap concept doesn't make sense to you, then just bag it. Don't worry about it. All right, let's see. Andy Tong, U.S. dollar, Canadian dollar. Looks like it hit the January 25 high looking at shorts. Although we got on the 920 monthly. Yeah, there you go. Hit the January 25 high, the dollar CAD. So let's see. That right there would be your January 25th high. Right there. So there's January 25. So your high would be 145.92, and we're sort of looking down in here to sell it a little bit. I don't think I follow you here. Maybe right here, for sure. On the 920 monthly, let's go ahead and check the 920 monthly out for the dollar CAD. Been long here since 2022, right? Right there, you pretty much retraced in March, and then you got the big April dump when the trade war kicked off, and now we're sort of grinding north. So I don't think I follow you on that one, Andy. No worries though. Okay, we got a few fundamentals to go over here, and that's okay. Let's see. We got basically the ADP employment report came out today. That was one of the reasons for your big volatility during the U.S. session. You'll see that it came in at 42,000. Now it's above 32,000 expected, and well up from the 29,000 that was revised from the previous release. You also had all these PMI numbers, which they really don't mean much. S&P Global, ISM non-manufacturing employment, all of these, you really don't have to worry too much about them. But the one thing that I would say that we looked at the other day, remember the ISM non-manufacturing prices? So we looked at those manufacturing price index. I don't know if you remember that. We just did that the other day. And this one right here came in above expectations and the previous release. That suggests that prices are still going up. That's not good. That is not good. So you definitely want to look at these reports, but I would take the ISM and the S&P Global. If you're working for those companies, don't worry about it. I'm not eating your lunch here, but do they really move markets? No, not really. ADP though, ADP can. And these, when they're released, they are going to bring a little short-term volatility, but not a tremendous amount. WTI crude oil inventories, this is the big one. We'll sort of end this thing on crude oil. We came in at plus 5.202 million barrels. That was way above what was expected at negative 2,500, and then also way up from the previous release, which was negative 6 million there. So when you read this is going to be your EIA government report. This is your weekly supply figures. You're looking at probably your third paragraph down is your most important. This is just the summary. This isn't the detailed report with graphs and everything. This is a summary. So right here, U.S. commercial crude oil inventories, excluding those in the SPR, increased by 5.2 million barrels from the previous week. At 421.2 million, U.S. crude oil inventories are about 4% below the 5-year average for this time of year. It's not good. You're still running a deficit. U.S. supply still isn't online, but it is growing. As we see this month go on, at least until the Thanksgiving holiday and maybe into Christmas, we could really see these inventories rise. Now, U.S. government shutdown. They're talking about grounding planes now. There was a big accident that was in Louisville yesterday. We don't know what the cause of it was. I don't believe it was because of a staff shortage or an air traffic control thing. It looked like a mechanical failure, but it was a UPS plane, a cargo plane, blew up. You don't see that very often. There's talk right now that they're going to really start shutting down airports and grounding a tremendous amount of flights because the situation just isn't safe. Now, I'm not relating that accident to what's happening in the government, but what I am doing is I'm telling you that if the airplanes are grounded, okay, that takes a tremendous demand for jet fuel. And if they are grounded for any length of time, let's say a week, maybe 2 weeks, I don't know if you guys remember COVID when pretty much everything was grounded, the jet fuel, the refinement of that big time commodity that you have to have for air travel, that took a lot of demand for fossil fuels, a lot of demand. So if you see something like that, you're liable to see WTI crude oil absolutely plunge because the supplies are going to go way up. Refinement is going to be way down. And that's just sort of where we're looking there. So if we were going to take a look at WTI crude with respect to this week's report, you see U.S. oil. We've been bearish essentially. We had a weekly sell. This is sort of off. Well, this is a monthly chart. You can see going back to sort of July, this 920 crossover gave you the short if you really wanted it. And it was a good one. It was a short right out there from about 78.65. I love that because that really coincides with the end of bidding season. Could you really take that trade? No, not really. Could you take this one? Yeah, you could. Let's go right down to our weekly. So the question really still is the same. You can see it's just a mess in here with crude oil, and that's because of the trade wars and the tariffs. There's your weekly sell. So you're coming off in a big, big way, right? Retest of April's lows. Well, it's interesting because you had that big week, you know, that spiked and knocked out all the retail shorts. I mean, it really was a short squeeze. People got destroyed there. The high it spiked up to about 62.59. And now we're coming off. Now we're looking at back-to-back negative weeks. And this week really has the potential to sell off and make a run at those April lows. So I still like 55 and a quarter down there. 55.50 as being potential bids. We're a ways off of that. How would you trade it right this minute? Well, I mean, there's lots of different ways to do it. For me, I would be looking to get short any way that I could. The problem is you're probably not going to get any sort of pullback to sell. But look at what you may get. I mean, this right here. Are you going to get a cross under? Or is it just sort of running parallel? You got to wait till the coding kicks in. Because there was your sell back on the 30th of September, and that was a dandy. That was a real good one. And then this right here, there's your pullback. Are you going to get another cross under or cross over? I think you're probably just going to keep trending south. So, you know, it's going to be difficult to get any kind of entry point from good trade location using a daily or a weekly chart right now. So you sort of just have to say, well, do I want to buy 60s or sell 60s? I probably want to be selling 60s. So that would be a high-risk way to trade it. But still, if you're looking for a move to 55, it's not a bad way to do it. That's for sure. Let me see. Unknown Scotty, gold is dead. Well, I don't know. It's alive to me. I think this is going to be a pretty good one to be trading. Oil is interesting. It looks to me like our bear run is setting up nicely. I'm waiting for the market to or the bottom to fall out of this market. And a large-scale grounding of aircraft here in the United States, this market will fall dramatically, just based on jet fuel demand alone. That's for sure. All right, guys, I'm going to go ahead. We'll pull up U.S. oil here on the Fibonacci's. You know, you could look at this on the weekly, and essentially we could draw some support zones, places potentially to buy. I just wouldn't mess with that. I think that you probably want to be a bidder once we make the yearly lows, somewhere down in that 55.50 area. I mean, you can see April's lows really setting up sort of a double bottom down there, something like that. 55.08, probably 55.50 to 55. It's going to be a pretty good support zone down there. As far as, you know, what are you looking at right now intraday? You know, it's really hard right now because you don't have much time left. You've only got about, 45 minutes or so left of premium trade in the WTI trading day until the volumes really start to dry up. Would you want to sell 60s? Yeah. 60.08. I mean, that's a pretty good sell. So right there would be your top of this thing was about 9 a.m. my time, about 11 a.m. Eastern. Right there was your news bar. So that would have given you the read on the inventory numbers, and then you would have rallied, and then you came off in a big way when traders got in there and started making moves, and now it's just been dead. It's been dead, and it shouldn't surprise anybody. Look at the volumes; they're just steadily going down into nothing. Towards the end of the day, you may get a rally and another test of 60. If that was to happen, I mean that's your trade. You've got a 30-minute 13 period EMA right there at 60.08. You've got sort of the daily range, the U.S. daily range, New York range. 38% of that's at 60.08. It's a down day. That's a pretty good scalping zone. I mean, if you wanted to scalp from up there and maybe look to grab 5 or 8 cents, it's not a bad play at all for an intraday trade. So, I mean, it would be right up here, somewhere in this area. That's for sure. All right, everybody, I'm going to go ahead and sign off here for today. We only had a few stories out to cover. Basically, the elections were sort of an indictment of the Trump administration yesterday. The Democrats won across the board. Supreme Court justices appear skeptical that Trump tariffs are legal. The tariffs are a big deal. If the Supreme Court doesn't let the tariffs move forward, you're going to have a lot of things that are going to happen. More than likely, the trade and the markets are going to move higher, but the trade's going to be rekindled. Optimism will be rekindled there. In elections, you can see the Democrats got the big sweep yesterday, which is going to have implications, especially in New York City. That seems to be the epicenter of this election cycle. Seems like we have elections every year in the United States now. To be honest with you, yesterday's elections weren't that big of a deal. Next November's elections, the midterms, those are a big deal because you can definitely be looking at turning over Congress, both the Senate and the House. Government closure still on. I have tentatively scheduled NFP Live for Friday, but probably not going to stand. We're going to go ahead and schedule our Switch Markets Live webinar tomorrow. Remember, that's going to be available in the How to Trade trading room or over on Switch Markets, the Switch Markets YouTube channel. So be sure to check that out. We're going to be scalping the 5813 EMA crossover strategy. So if you want to learn how to do that, tune in. It's a lot like the 920, but it's one of our more popular strategies that we put out over on the How to Trade Calm YouTube channel. That's for sure. All right, guys, I'm going to go ahead and sign off here for a few hours. Sort of a midweek, lackluster, but there's a little bit of movement out there. We really are focusing in on the government shutdown. When is that going to be over? Now that the election's over, we're thinking it could end any time, and we're also waiting for those strikes on Venezuela. Those look to be off the board at this juncture. There was a lot of tough talk last week at this time, and now there is none. So maybe those are off the board for the immediate future. Very difficult to say. As far as what we see happening here, it's anybody's guess. It really is anybody's guess. But we'll be there. We'll be here with a trade idea a little bit later today after the market closes. I want to see some more out of price action. We may get an opportunity to pull back, sell U.S. oil. That may be a great trade. We just got to wait and see how it all pans out. Stocks are up. Energies are down. Natural gas showing some weakness, but been on a tremendous run. And then the U.S. dollar sort of hovering near flat. A lot going on. All right, guys. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.